In fact, if you look at the consensus estimate, consensus is expecting slightly more than that. For the large caps, the consensus is expecting close to 20% earnings growth. For mid caps, consensus is expecting anything from 25 to 30% earnings growth. And small cap, in fact, 35 to 40% kind of an earnings growth. That's what the market is expecting. Now, here there are one major factor. The major factor being margin expansion. Now, if you look at the manufacturing sector, almost the raw material to net sales is almost 65%. Now, all of us know that the commodity prices had gone up very significantly in the last year, and that's why there was a significant margin compression. Now, as the commodity prices normalize, this margin is going to come back. So it's quite possible during the current year in various sectors, the volume growth will be lower than last year, but because of the margin expansion, the overall earnings growth will be pretty strong. Similarly, while in the financial sector, it's quite possible that the net interest margin will come down. Their asset side gets repriced almost immediately, whereas the liability takes time to get repriced. So, because of that, as the liability side gets repriced, there is a possibility of actually NIM compression for the banks and other financial companies. But having said that, there is also a possibility that the asset quality will improve in that sector, and financial being the heavyweight at the index level. Now, if the asset quality improves, then the provisioning requirement goes down, and if the provisioning requirement goes down, then despite some pressure on NIM, their earnings growth can be pretty robust. So, I think the story of earnings growth is basically the story of margin expansion.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.